Everyone thinks the S&P 500 is the safer bet, but let's actually look at the data. We're comparing gold versus the S&P 500 using 15 years of monthly investing, just $200 per month. At the beginning, both assets move pretty similarly. Small gains, steady growth, nothing too surprising. But as time goes on, differences start to appear. Around 2014, the S&P 500 begins to pull ahead, showing stronger momentum and higher returns. Then comes 2017, and the gap becomes even more visible. Stocks continue to outperform, while gold moves slower. But look closely during market events, during crashes and uncertainty. Like COVID, gold holds much better, while the S&P 500 becomes more volatile. Still, over the long run, the S&P 500 keeps pushing higher. By 2024, the difference is significant. And by the end of 2025, both strategies perform incredibly well. Gold reaches around $98,000, while the S&P 500 is just slightly behind at about $97,000. So what's the conclusion? The S&P 500 grows faster over time, but gold offers stability during uncertain periods. Which one fits your strategy? Try your own scenarios on CalculatorInvest.com.